Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And I have had some people write in last week and they said, Greg, we've been watching your live stream and every day you talk about looking at a potential trade, not just on one time frame, but on multiple time frames to help increase the probability that the trade will go your way. So I think it's a good topic, and so in this video I'm going to address that, and we're going to look at several charts, and I'm going to show you how I analyze not just the time frame that I'll be placing the trade on, but also the higher time frame above it to see if I can find some clues or find some support in addition to the time frame that I'm going to place the trade on. It's always important to look at charts in multiple time frames and see if you can get double confirmation of the price that you're buying has some support in both time frames. So I hope that makes sense, and hopefully this video will help you understand that. Before we get started, I do want to thank everybody for coming every day to my live stream, which is during the last hour of the market, Monday through Friday, where I do live trading. I also do mentoring and questions and answers. So if you haven't made it to the channel, put it on your calendar. It's during the last hour of the market, Monday through Friday, and it's live. So you can tune in, take a listen, ask questions, and see how I approach trading the market. And if you can't catch it in real time, you can always watch the replay. So anyway, that's what we're gonna do. I'm gonna turn the webcam off because I'm gonna have to be looking away, but I will come back and say goodbye when we're finished. So hold on one sec. Let me turn this little guy off here. And we will put Katie and I there instead. Katie is my German Shepherd and my trading partner. She trades with me every day. So, okay, so let's get to it. So I'm going to go through, I have current trades right now, and I'm going to explain quickly, why I took each trade, but I'm also going to then look at the larger time frame and explain to you what I saw on that larger time frame, which helped me decide to take the trade on the smaller time frame. So, okay, hope that makes sense. Let's start with Amgen. So I bought Amgen here on the 9th of May. And the reason that I bought it was for multiple reasons. One, we had a V1, V2 entry, which is right here. That just means that this day went below the low of the previous day, closed back above the close of the current day. That's a V1 entry. It also washed out the previous low, so it was a false breakout into a new range and closed back into the old range. So those are the reasons that I actually took the trade, but on the daily time frame, which is the time frame that I trade. But if we look at the weekly, so if we go one time frame up, the reason that what I liked on the weekly was that we had already tested the 200-day weekly moving average. A 200-day moving average works fine on the daily. It also works on the weekly. It also works on the monthly. These moving averages, depending on, no matter what time frame that you're using them on, they do have some significance. So the previous week, it had tested the 200-day and then bounced off of the 200-day. So when I took my trade, I knew that already, and that gave me that gave me another reason to take the trade. So if we look at the weekly again, you can see the previous week it already had tested that, it rejected it, it showed that it didn't want to go down any further, And although on the week that I took it, it did, but the positive side is that it tested it and closed back above the 200. So the reason I took it on the daily here was that I had already seen it test the 200-day or the 200-week moving average. So that is Amgen. Gold. So I took gold on Friday, 510, and I took this, my entry signal was a 520 EMA cross. So my entry signal on the daily was a 520 EMA cross. But I also took a look at the weekly chart to see if there was anything going on here. And there is. You can see for the last 3 weeks, we have gone and tested below the 10-day or the 10-week moving average. And then on Friday, finally, it was able to close back above the 100-day. So on the daily, I took the trade because the 5 crossed over the 20, which by itself is a proven back-tested approach. But I always look at the higher time frame to see if I can find something positive there, and that is positive. You know, we closed back above the 100-week moving average. So I hope you're starting to get an idea of how I look at both time frames and how I want to find something positive on both of the time frames. Near the end of this video, I'm going to go through some weekly charts that there is nothing positive that I can find. But again, with gold, it is positive as that we went under in the past few weeks under the 100-day moving average and then finally closed back above it. And at the same time, we had a 520 cross on the daily. So multiple time frames, multiple setups. You know, on the daily, on the time frame that I actually trade, it really has to be a perfect setup. On the weekly, it doesn't have to be perfect, but it does have to show something positive. It has to show that it bounced off a previous moving average, or it closed back above a moving average, or it found some support from the previous high that used to be resistance, and then it became support, and it's continuing to find support. I'll show you some other examples of this as we move forward. All right. Goldman Sachs, I took on Thursday, and I took it on Thursday because we tested this 50-day moving average, closed back above, and we also triggered a V1. This went below the previous day, tested, didn't like it, moved back up, also rejected the 50-day moving average to the downside, closed back up. So it's a V1 entry. So on the daily, it's fine. It's a good, decent signal. It also tested this previous low over here, went into a new range and back up. So multiple entry signals. V1, rejected the 50-day moving average, tested this previous low, closed back up. But when we look at the weekly, can we find anything positive on the weekly? And yes, we can. Do you see how on the weekly we went below the 10 and the 20-week moving average and then closed back above? So that's what I'm talking about. That's what I'm talking about, getting double confirmation on both time frames of something positive happening. Now, would I take this trade just based upon on the weeklies? Probably not, but I'm not taking it on the weekly. I'm taking it on the daily because of the reasons we just discussed. But when I look at the weekly, when I look at the bigger picture, is there anything positive? Yes. Rejected the 5-day, rejected the 10-week moving average, rejected the 20-week moving average. It bounced off them and closed back above. So that is positive. And so that is the reason that I took the Goldman Sachs trades. It's very far and few between where I will take trades on the daily unless the weekly has some kind of supporting price action. All right, let's take a look at MasterCard. So MasterCard, I took back here on the 7th of May. I took it on the 7th of May because the prior bar was a large reversal up bar. The next day it came down, it held the halfway mark of this bar. It also rejected the 20-day moving average to the downside to close back above, and it was also above 50, the 50 RSI. So I bought it right here. You can see the next 2 days it went down. So I did have a loss in the trade. I didn't get out because my initial stop was the 20-day moving average. It closed above. It still closed above. I base everything on closing prices. And then Friday moved my way nicely. But when we look at the weekly, what's positive about this on the weekly? Well, I did not take the trade on Friday, right? Here is Friday. I took it earlier. So I really didn't know that it was going to close above this 5-day moving average. If I would have taken the trade on Friday, it probably would have been a better trade in the fact that we had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. So that by itself is a good setup. And then if you combine that with the week on the weekly, do you see how it rejected the 5-day and closed back above the 5-day? So that is really positive. But I took it a few days earlier here. And so you might say, well, Greg, what was positive about the trade on the weekly when that happened? Because it didn't show you that it was going to close above the 5-day moving average. And what I was keying off was this high. See how we had this high? We came back down. Now that high acts as resistance. Then we finally broke above that resistance. So this resistance, this previous resistance, what once used to be resistance, acts as support. And as you can see, it came down, tested that support, and bounced off it. So my mindset when I bought this was, I know there's going to be some kind of support down here at around this price, and that's why I bought it. But if we were to buy this on Friday, it would have been a much clearer picture, as this is a legitimate buy signal by itself on Friday, but it's strengthened by the fact that we went down below the 5-week moving average and closed back above the 5-week moving average. So, having the trade back here, I like these signals very much because I'm already in the trade. But if I had not bought it here, would I have bought it here? 100% I would have, because of the V2 entry and the confirming price action on the weekly, where it went below and then closed back above the 5-day moving average. All right, let's move on to Microsoft. So Microsoft is a good example of a trade that I took on Friday. And why did I take it? Same thing. We had a V2 entry. Here's day 1, day 2, day 3. Day 2 went below day 1, washed it out. Day 3 closed above day 1's close, and it also closed above the 10-day moving average. It closed over a 50 RSI. So these are all great things, but we have to have some kind of confirming signal, some kind of confirming price action on the weekly as well. And what was that? That was that we went below the 5-day and it closed above the 5-day. So that is what's key. This was the confirming price action that I wanted to see on the weekly. Nike. I bought Nike here on the 9th of May. Why did I buy it? I bought it because there's a V1 entry. This day went below this day and then actually closed above the prior day. So this day washed this out, went below the low. There were no more sellers in this area. It moved the price back up, closed above the previous close. That's positive. And in addition to that, we also went below the 100-day moving average and closed back above, rejected the 100-day moving average. And we had closed below the third ATR channel, which is this thicker line here. And on the day that I took the trade, in addition to the V1, in addition to washing out the 100-day moving average, it also closed back in the third ATR channel. And a large percentage of 80 to 88% of all prices usually stay within the third ATR channel to the top and the third HER channel at the bottom. So most of the time, it's really going to have a hard time getting above here. It's really going to have a hard time getting below here. So taking this all in the aggregate, V1 entry, washed out the 100-day moving average, closed back up into the third day ATR, and also had a V1 entry. So lots of signals there, and you can see I bought it here. Next day it moved up really nice. But let's take a look at the weekly and see what the supporting price action was on the weekly. Well, the support was that we tested the 20-week moving average and it closed above. So it's good on the daily. It's great on the daily, as a matter of fact. There's 4 setups on buying this on the daily. But is there any confirmation? Is there anything that we can take away positive on the weekly? Yes. It held support at the 20-day moving average. Would I buy this if I were trading weekly charts? Would I buy this? I might, actually, just for the fact that it tested below the 20-week moving average so strongly, closed back above. And if I was wrong, any close below this 20-week moving average, I would get out. So it's decent. I don't know if I would take it if it were just a regular trade on the daily, but as far as supporting price action in a higher time frame, really good. So, okay, hope that makes sense. Nike. So Nike, SPY. I trade SPY differently. As most of you who watch the channel know, I buy this in the nighttime and I sell it first thing in the morning every day because of the statistics and back tests based upon that approach. But I thought this was a good example to show you as far as double confirmation on multiple time frames. Here we have the same pattern. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. And at the same time, we tested the third ATR channel twice, tested the 50-day moving average twice, and it was able to close back above it. So that's positive. I didn't take this trade based upon this, but I certainly would have if I wasn't trading a different way on SPY. But let's go ahead and look at the weekly and see if we would have bought this on Friday, would there have been any confirmation on the weekly? Yep. What's the confirmation? The confirmation, twofold actually. This was the previous high that acted as resistance. See how that resistance came down? Now we broke back above it. So this previous high that used to be resistance should act as support on the way down. And did it? It did. It came down, tested it, did go down for a little while, but then rejected it. But it also rejected the 10-week moving average. So would I take this trade just based upon that? If I was trading weekly bars, probably not. But again, the higher time frame does not have to be perfect, but it does have to be positive. The smaller time frame where you're actually trading should be perfect, really should be perfect. But can I take something positive away on the weekly? 100%. It tested this previous support and held. During the week, at some point it was below, but it closed back above it, so that's positive. And it also tested the 10-week moving average, went down below, closed back above it. So yes, that is all positive as well. Okay, UNG. So why did I buy? I bought UNG on Friday right here. And why did I buy UNG on the daily? Well, multiple reasons. We have a higher low. Do you see this low is higher than this low? Well, just to take you through it, people that bought here, when it got up to here, that was a nice profit for them. They sold. That selling pressure causes the price to go down, but there was not enough selling pressure to bring it back down and test these lows. So again, people that bought here, sold here, but it was able to catch a bid and move up from there. And the nice thing about that is the people that bought here sold here. So all those sellers are gone. That makes it easier for the stock price to move up when you have a whole group of sellers that are gone from the equation. So here's the higher low. I didn't buy it here because I didn't have any particular signals, but it was positive. The reason I bought it is, one, because we have the higher low, but on Friday we took out the high of that previous high, which is called a fractal. A fractal, two lower highs to the left, two lower highs to the right. So having a higher low in place, also triggering a fractal. You know, another way to look at a fractal is just a breakout, but not all breakouts are fractals, because fractals have to have two lower highs to the left, two lower highs to the right. Some breakouts don't have that formation. And if you look up Bill Williams on YouTube, he has some good videos. They're kind of old, but it's fascinating about fractals. So that is the reason that I did buy this higher low in place, and we also triggered the fractal. So on the daily, that's why I bought it. But let's take a look at the weekly. What's positive on the weekly? Well, this one might be a little tougher to find. And there's actually a couple reasons why. A couple weeks ago, we had a V1. See how this bar went below this previous low and closed back above the previous close? That is number one. That by itself is pretty good. But you see this bar with this triangle? You get this triangle when you have the current bar that goes higher than the previous high, but then closes lower than the previous high. On the face of it, that's a bearish signal, which is fine. But the reason this bar actually painted and stayed painted was because this next week took out the high of the previous bar. So here's the high. This bar goes above that high, but then closes under that high. The next week actually closes above this high. So this is called a fake out. Larry Williams taught me this many years ago, and it is good. Would I take the trade just based upon this fake out confirmation? I might. It's pretty strong. But you know, the point I'm trying to get across here is that I had strong signals on the daily where I'm taking the trade. But was it positive on the weekly? It sure was. It sure was. We had a V1. We confirmed this false breakdown to the upside and then closed back above there. So that is why I took UNG. All right, and our last one is oil. So why did I take oil? I took a long position of oil back here on the 8th of May. And why did I take that? Well, I took that because the previous day closed below the 200-day moving average and then closed back above. I like to key off of the 200-day moving average because if you close below the 200, that's bearish. But if you can then close back above the 200, that is bullish in my eyes. And the next day, it actually went down below the 200, but I did not get out. And why did I not get out? Because it did not close there. If it would have closed under the 200, I would have gotten out of the trade. But it closed above. And so that kept me in the trade. So I am still in the trade as long as it does not close below the 200-day moving average. So that's the reason I got in on the daily. Well, let's look on the weekly and see if we can find any positive aspects on the weekly. Yes, because we tested this 10-day moving average and it bounced off the 10-day moving average. So I hope that makes sense. On the negative side, it also rejected the 50 to the upside, but that's okay. Like I said, it does not have to be perfect. I have to just have some indication that something is positive, some kind of level is holding on the weekly in order to take the trade on the daily. And remember, the trades on the daily have to be very accurate. On the weekly, they just have to be decent. You have to show something was decent. So I marked a few charts here. where, and these are weekly charts, where if the daily setup and then I turn to the weekly, if I could say something was positive about them, right? So here's Amazon. If the daily had a decent setup, here's the daily. There's nothing really there, but let's just say there was. And then I turn to the weekly. Is there anything positive about this? No, not to me. If it had, see this 5-week moving average, which is at 1892.20, if it had gone below this, and at the time I wanted to take the trade, it was above this, that would be good enough. But if there was a really good trade today and I looked at the weekly, is there anything good I can say about this weekly? Not really, because the price is 1889. It's below the 5-day moving average. So I really couldn't take away anything positive from this trade. Okay, sorry, I had to let my pup in. She wanted to know what all the commotion was about. So yeah, something positive on this Amazon weekly chart? Not really that I can see. Let's look at Boeing. So if right now there was a decent setup on Boeing on the daily, and then I turn my attention to the weekly, is there anything positive here on the weekly? Not really. It's below the 50-day moving average. It did not hold support there. It did not hold support at the -1 ATR channel. If it was a 30-33 RSI, that might be enough. But right here, no. I mean, not at all. If Wednesday or Thursday the trade came along and it looked good, but it was now above the 50-day moving average, then that might be good enough. But if the trade was today and I looked at the weekly, I would have to pass on the trade because this is not enough. Caterpillar. Again, if the trade was on the daily and I looked at this chart on the weekly, is there anything positive I can glean from this? Not really. I mean, if you really wanted to stretch it, you could at least say, well, it tested this previous low and now it's above. That one possibly, if you really wanted to get in the trade, I guess you could convince yourself of that. But other than that, there is no other positive indication on this weekly. If it had gone down below this 1 ATR channel and then closed back above, yeah, that would be something. But here, no, there's really nothing there other than it went below this previous low and closed back above. So this one's kind of dicey. This one's dicey. Dexcom. If we found something good on Dexcom on the daily right now, we turn to the weekly. Is there anything positive about the weekly? Not really. Not really. We've tested the 50, rejected it. We couldn't even hold the 1 ATR channel. So if I had the trade on the daily right now and I turn to this weekly, I probably would just pass on the trade because there's no indication on the weekly that there's any support that it's holding underneath us. Intel. Again, if there was a good setup on Intel right now on the daily, and I looked at this weekly chart, would I take something positive away from this chart, this weekly chart? No, I really wouldn't. I wouldn't. I mean, look, we're down below the 100-day moving average. We've closed down below the 100-day moving average. There's really nothing positive there. Now, at the end of the week, if Intel was even lower, but we were cashing some support possibly on the weekly at this 3rd ATR channel or the 200, then yes. So I hope this is making sense. But always look for some kind of confirmation on the higher time frame. Let's look at MO, which is Altria. If I had a great trade on the daily and I look to the weekly, is there anything there? No, there's not. If it had closed below and closed back above there, that might give me a little bit of a reason to think that it has found support. But at this point, we haven't even tested this low. So there's just nothing positive here whatsoever. Let's look at Netflix. If I had a trade on the daily on Netflix and I turned to the weekly, is there anything positive here? Not really. I mean, if it would have closed back above the 10-week moving average, that might be something. At least I knew that that 10-week moving average was holding. But no, it didn't really quite test the 20-week moving average. If it would have tested the 20-week moving average and closed back above, then I could have said, okay, there's maybe some support at the 20-week moving average. But in this case, it lost the 10-day, hasn't tested the 20-day, so it would make me suspect about taking a trade on the daily. Silver. If I had a really good setup on silver, is there anything on the weekly to show me that there's some kind of support? No, not really. I mean, we did almost test the second ATR channel down here, but we didn't really test it. We didn't thoroughly test it. And, we would, if next week we came down, reversed back up and created a V1 on the weekly, that might give me enough confidence to take the trade on the daily. Or if it came down and tested this third ATR channel on the weekly or just stopped right at it, that might be enough. But I can't I can't look at this chart and find any real support on the weekly whatsoever. So I would have to pass. Tesla, again, if we had a good entry today on Tesla on the daily chart and we turn to the weekly, is there anything positive there? No. There's really not. We tested this 5-day to the upside, rejected it. We haven't tested these bottoms. If it got down to this level here, that might give me confidence enough that this, might be a confirming support on the weekly, or if we got to a 30 RSI on the weekly, something like that. But at this point, no matter how I look at this or turn the screen upside down or wish and wish and wish, I cannot reasonably look at this and say there's something positive on the weekly about this chart. All right, let's look at XLE. If I had an entry on the daily and it looked good and I turned to the weekly, is there anything here? Not really. I mean, the only thing I could say is that it did test this previous low, rejected it, and closed back above. I mean, that it's something, but it hasn't really tested any major moving averages or anything like that. A test down here, that would give me enough confidence. I mean, if on the daily, the setup on the daily was so super great, and I looked at this, maybe, because it did test this prior low and reject. So in a way, it did have a false breakout to the downside and a reverse back up. But you'd be stretching it to base it only upon that. Healthcare. If there was a good trade on the daily and I turned to the weekly on healthcare, can I find anything positive there? No, I cannot. It tested all the major moving averages to the upside, was not able to hold above them, closed below them. I would have to, if it tested this 100-day moving average again and closed above it or stayed right above it and the trade was on the daily, then yeah, that might be enough. But here, no. But, let's say at the end, let's say Wednesday or Thursday, it's above here, right? Let's say it moves up and then I find a good entry signal to the upside, and then I look at healthcare and now it's above the 50-day or these other moving average or 50-week or other moving averages, then yes, I would say, okay, it went down below, now it's back above. That's enough to give me a double confirmation on multiple time frames. All right, and our last one is XTN. If I had a trade on the daily, could I look to the weekly and find anything positive about this? No, I could not. I mean, the 20-week moving average is 61.51, and currently it's at 61.46. So it could not close above the weekly 20-day moving average. Now, if it closed above here, and then I look on the daily and there's something good, then yeah, I could say, okay, it tested the 20-week moving average. But, if I look at it right now, right today, and it's there, it's not enough. It's not enough for me. So anyway, okay, I hope that makes sense. Hey, there I am. So I hope that was helpful. If you're not clear on this, feel free to send me an email. The email's in the description. of this video. And again, if you're able to, please join us Monday through Friday during the last hour of the market. Just go to Gossett Trading on YouTube, and we will be there live, and I will be going through my entire watch list. I'll be talking about why a particular stock might look good. It might be, it might be a candidate to buy at the end of the day. Of course, we're going to look at things in multiple time frames, just like I showed you in this particular video. So if you have any questions, let me know. Send me an email, and hope you join us. And I hope everyone out there has a good weekend. Happy Mother's Day to all the mothers out there. And I guess I should say lastly, a little plug. I do offer private one-on-one lessons in the evening time via Skype. So if you need help with your trading, some mentoring, some guidance, I'd love to help you do that. I have had really good success with my clients. So you can email me and let me know that you're interested, and we could do an initial call. And I just like to, get an idea of what you've been doing in the past, what your goals are, and I'll try to put something together that can help you achieve those goals. So anyway, thank you so much. I appreciate you tuning in. I hope this helped give you a little bit more understanding about how to look at multiple time frames. And on the way out here, I have to do the U.S. government required disclosures. So, all right, everybody, take care, and hope to see you Monday. Have a good weekend. Happy Mother's Day. Bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.